Welcome back to the channel. As always, if you're copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a stock called Devon Energy Corporation, ticker DVN. And what these guys do, they are a company obviously related to energy, so hydrocarbons, uh, engaging in the exploration, development, and production of oil, natural gas, and natural gas liquids in the US. Now, I've been looking at this company for uh, quite some time and decided to revisit this sector, having observed the weakness in the US manufacturing sector, which, as you can see here, has been quite consistent over the last few months and arguably since late 2022. So, as you can see here, since this year, we've had a decrease, especially around Q3 of the year, with a slight uptick in recent months, but it's still in negative territory, which obviously signals a slowdown in the economy. That tends to bring lower prices for cyclical commodities like oil and natural gas. And we can see here that, for example, WTI has been subdued for quite some time. Now, there's a bit of an uptick in commodities today because of tensions in the Middle East, but I do think that this low price environment will continue for these type of commodities. Point number one, inflation seems to be starting to uh, find some breaks at last. Point number two, we have at the moment slow demand from Asia as well. So there's an article here that was released yesterday by Bloomberg where they comment on Saudi Arabia selling oil to Asia at a bigger discount than anticipated, which signals lackluster demand from this region. And yes, China announced today a new looser monetary policy, but the demand, even though it's being facilitated, is just not there to uh, foster that kind of activity. And as we have seen here, same is happening with the US at least. We also have, of course, the prospect of uh, uh, an end with the conflict and a de-escalation of the war of Ukraine and the tensions in the Middle East. So what happens if we have a conflict de-escalation and Russian oil comes back to the market in the next few months? This is a company that, like many others, if we look a little bit back in time, right? Like many others, benefited from the start of the war in Ukraine. So we're looking at, yeah, early 2022. And this is what the company did because all of a sudden, the Russian oil exports started coming to Europe, and the US became a major exporter of oil. But what if that supply is now back into the market? Well, we could see significant downside for this company, which, as we see here, has broken major or critical support levels, right? So when you look at the performance of the stock, it's down 14% over the last 3 months. That is the worst performer in the sector. And we see as well a few other macro factors that could accentuate that performance. So first of all, the dollar, which has been performing quite well for a while, as you can see here, since October. could continue to remain strong uh, because of the pickup in economic activity in the United States, especially when we think about the prospect of other economies like Europe, Asia, still slowing down. So we have seen how, for example, the measures announced by the Chinese government will likely devaluate the yuan, and that, of course, will have a negative impact on oil as well. Now, let's look at the company itself, right? So we can see, for example, that price is typically aligned with EPS, or at least has been for quite a while, right? Especially since we started the pandemic era, definitely. But now it's taking a turn where it's crossed the price level. At the same time, analyst recommendations are gravitating mostly towards strong buy, despite being a stock that has been performing very poorly, and buy and hold recommendations. As a matter of fact, the analyst average ratings has been picking up, whilst at the same time, the price of the stock has been going down and down consistently. So I think that there is room for a reallocation, if you will, an adjustment of all these price targets and recommendations from analysts in the sell side. So what if we get to earnings around February time, right? These issues that I've been talking about continue, and then company has a big miss. Analysts start cutting their price targets and recommendations. As we have seen here, there is plenty of room to downside, perhaps to $25 or less. Now, in terms of comparison to um, competitors, I wanted to show you uh, the following metrics that I've prepared. So there's a reason why I selected this company. First of all, like I said, it's got plenty of momentum. It's the worst performing stock over the last 3 months in the sector. But there are other reasons too, because when it comes to other companies that have low margins, Total and BP, as you can see here, were some of the candidates that I have for shorts. As a matter of fact, I may short these companies too. But the reason why I think DVN is quite an interesting player is because they have the highest break even per barrel in the sector at $45, which is still significantly above, for example, Total, which one of the lowest, and BP. So these guys at 45 is when they start making money. And like I said before, right, when you look at the oil price, we are currently at, depending on which index you look at, 68 to 72. So what if the oil price goes down? These guys are gonna get hit the hardest in the sector, even if they are more profitable than the rest in terms of margins. Because if we look at uh, some of the KPIs here, you can see that production, right, has been increasing over the last few quarters. The efficiencies remain the same, but at the same time, the stock has been going down. And if we think back again at the catalyst that I mentioned before, right, the Russian supply coming back online, the dollar, these guys could be producing a lot more. But what if there's no margin on the production, right? They will have to literally max out their capacity to have the ability to make the same money than they were doing before. And that's why I think that the stock's getting punished. So look at how has been going down. It's at the moment a very strong channel. And so today it's going a little bit, like I mentioned, there's an uptrend today, an uptick in energy commodities, which I think is driving this. We could have a few days where the stock goes back to these levels, and that's probably the time that I would be waiting to short the stock, where technicals put the probabilities in our favor to make money out of the stock over the next 2 to 3 months. But I think it's one that I'm gonna keep on my watch list for sure. And we'll be watching, of course, along with the all the macro factors that could have an impact on this stock. So, of course, in terms of risks, we'll have to keep an eye on what the Trump administration announces, what changes they introduce, right? And all those things that could result in a tailwind for this company. But I think the probabilities are good, so probably one that I'll enter in the next few weeks, if not in the new year. Hope you enjoyed the video. See you soon.